I all trust that you're all having a wonderful evening as we prepare for this trading week, right? That I'm about to give you an outlook of, specifically looking at GBP USD right there on my left and GBP and Euro USD on my right. So I'll be giving you an outlook, right, of what to be expecting as we trade throughout the week, right? Even what to expect as market opens, right? So another thing is that I'll also be giving you some valuable ideas, right? Some gems along the way to just enforce your knowledge and understanding of how these markets move, right? And of course, consequently, to also improve your system, right? Because at the end of the day, it's execution. It's not about how much you know, right? Or who knows how much, but it's about execution, right? It's about clicking that buy or sell button, right? That matters in the end. So you should be putting all your effort towards that, right? So without wasting much time, let's get into it. So first of all, we shall be looking at the 3 months time frame, right? I know this is a weekly outlook, right? But the reason why I'm going on the 3 months time frame is just to recap, right? Since we're like in the middle of November, right? And price has been doing quite a lot of stuff. It's always important to zoom in, right? Yes, to zoom in on a higher time frame so that you can see what's going on with the bird's eye, right? From a sky view. Yeah. So here on the 3 months time frame, it's quite simple. I already did my 3 months time frame analysis at the beginning of this quarter, right? I think it was at the beginning of November. So you can watch my previous video for you to get it detailed. Why, when, why, where of the 3 months time frame, right? All those questions would be bestly answered in that previous video. But just summarize what you can see here on the 3 months time frame. We have the SMT, a symmetrical difference in price, right? Um, and this is a key level. There's the SMT, particularly looking at this FVG that you can see right here on GBP USD. It was filled on GBP USD. And if you look on Euro USD on my right, it was not filled. That's what SMT is, right? Of this type. And of course, you could relate highs and lows in the context of candles, right? You could use the candle high and candle low, or candle low. In this case, it's a candle low, right? That you'd be using to emphasize the SMT, right? Because after all, an FVG is marked by consecutive candle highs or candle lows. That gap is what you'd be calling an FVG. So that alone easily simplifies the bias on the 3 months time frame to be bullish, right? Towards this high, which acts as our what? Our draw of liquidity. And buy side draw of liquidity to be specific. So that's it on the 3 months time frame. We now zoom out, going on to the monthly time frame. And so on the monthly time frame, price expands, right? As we go lower, right? As we go micro with the monthly time frame. The monthly time frame for us to come up with what? With the monthly time frame candle bias, directional bias, and of course the draw of liquidity, which is a simplification of where exactly you're expecting market to reach, right? As we approach a certain month, right? Or as we are within a certain month. So on the monthly time frame, in terms of our growth liquidity, we already have the one that already exists from the 3 months time frame, which is that very high. You can see it from both EU and EU. It's quite similar, right? But what's unique is these left side PDRAs, right? These bearish PDRAs, which are usually bound to make price fall off from them, right? But there's an important rule about PDRAs and order flow, right? It is that price is bullish or bearish in terms of its order flow only until it reaches a higher time frame key level. That's when you can disregard that level. I hope you got that, because you have to get that. That's very important. That's a very valid trading secret, right? Technical analysis secret. Always know that. So yes, I know these look very convincing. Order block. Probably want to keep on expecting lower prices, but I wouldn't. Why? Because we've reached a higher time frame key level with an SMT. So yes, you'd have to disregard this left side PDRAs, right? Yep. So with that said, the order flow, we have to resort to being bullish, particularly expecting a bullish market structure shift on the lower time frames, right? Right down there. You should get it, right? In accordance to what we have seen on the higher time frame. And how you can also identify your growth liquidity on the monthly is this dealing range, this quite pretty dealing range, which is clear, right? We have premium, we have discount, and price creates a dealing range. You would want to see price reach the equilibrium, right, of the dealing range, or dip into the discount for this particular bullish expansion. We'd want price to reach the discount. Then if it does, then your growth liquidity is conveyed towards the opposing high of the dealing range, which is that growth liquidity that already exists. So you see how price is fractal and literally mean the same thing across all time frames. Yeah, that's the beauty of price action. So to simplify the monthly as well, my bias is bullish because of the SMT, right? And because of the higher time frame key level that exists, right? Then my growth liquidity is the buy side. So my bias is bullish, quite bullish, right? So we are also coming off from a 3 month key level. So within a 3 month key level, you would usually want to see a monthly CRT form, right? Is a candle range, right? You'd want a 3 month candle range to form around 3 month key levels. You'd want a monthly CRT candle to form around 3 month key levels, right? And those kinds of CRT would be valid or high probable because of something called time frame alignment, right? That's quite a deep concept, right? If you're interested in learning more, you can follow my social media channels, and you can DM me on WhatsApp, right? I believe if you get access to my Twitter, you can then get access to my WhatsApp, where you can talk to me, because I do one-on-one teachings. That's my method of teaching, right? I do not do pre-recorded courses. I teach one-on-one live. So yeah, that's the unique thing about my service, right, to you guys publicly. And then this is the monthly, and you see that the same CRT candle exists on the correlated pair, which is Euro USD. Then this would be the candle range. So another misconception that people have is that they would take this CRT for granted. They expect it to work like magic. The reason why I put the CRT on, right, I marked this CRT, is so that I can refine my draw of liquidity at a much more precise draw of liquidity that can be easily reached since I'm an intraday trader. Because as an intraday trader, my objective is not to aim for the old highs, right? Short-term highs are my target, right? I literally have to be in and out within the day. I wouldn't want to keep on holding for days, right? That's my style of trading. So that's the reason why I marked this yard. It's not because immediately I'm now moving on to the lower time frames. I'm now looking for a buy immediately. This is for my draw liquidity. It's not necessarily an executable CRT, right? That's how you must use CRT. You must use CRT as a logic, not as a pattern that you're gonna trade like a pattern, right? So we move on to the weekly, and from the weekly, what we can see is that we've got okay, sorry, from the weekly. You can also see that we have a candle range that formed all from the existing SMT, right? This kind of CRT, right? I'm not going to elaborate that much on why this CRT is valid, why am I picking it, but it's valid. That's what I can say, right? Because this is just going to be a short outlook, right? If you're interested in learning, then don't be greedy with that money you have, then just invest it in learning, right? Because you don't know anything. But if you know something, then good for you, I guess, right? So I guess that's what I can say. So this CRT is valid. It's valid, and it refines the draw of liquidity, right? From way, way, way up there to down here, right? I'm doing this for my what? For my draw of liquidity. This CRTI would be my draw of liquidity. And from the left side, you can see that right here, price purged this high, this odd low, sorry, not high, this odd low, it was purged. And so that acts as a key level, right? And opposingly, on EU, we have the mean threshold of this rejection block that is acting as an alternative key level. So that conveys price towards this draw of liquidity, right there on EU, right there on GU. So automatically my weekly bias is bullish. I'm expecting bullish prices this week, right? Ideally, I would want to be selling, right, below the opening price. Then, so I want to be buying below the opening price, then targeting the 50% of the range and the opposite end. And of course, the 50% of the same candle on EU has already been reached. So ideally, you should be targeting towards the high, right? That CRT high. So another trading secret, of course, this is for execution. If you're trading a pair like GU, right, and of course you're also looking at EU, or you're trading EU, so you have to also be looking at GU. when you enter a trade, perhaps down here the CRT low, and your target is the CRT high for both pairs, then put an alert on both pairs on the CRT highs. There's something called an SMT exit. Sometimes price can hit the CRTI on another pair and on another pair it doesn't. It may be on the pair that it doesn't hit the CRTI, while you are in a trade, it reverses and you say CRT is a scam. But it's not that it's a scam, it's just that you don't know what I told you about today, that you have to put alerts on both pairs because there's something called SMT. Symmetrical differences are there, they happen, and it's either you can use them as an advantage or they can use you as a disadvantage. You get it? Yeah, there will be like a disadvantage to you, I guess. So make SMT an advantage, not a disadvantage. So then we move on to the daily. I don't want this video to be long, so we move on to the daily. And on the daily is quite nice. The daily we have this pretty order flow. The order flow is bullish. We have the engulfed down close candles pushing price higher, and we currently had this down close candle on GU, right, pushing price higher. So Monday, as we open on Monday, I'm immediately expecting higher prices, right, without fail. Same on EU. Yes, it's fine if price wants to fill in this gap. If it does, then use that gap as an edge, right? As an execution edge. Use it and expect higher prices. For Monday's bias is automatically bullish. Aim to buy below the opening, right? So I'll also go on the 4 hour just to see what you can use on the 4 hour. Exactly on the 4 hour, you can also see the same gap, right? You can refine it to the 4 hour and you could use the same gap. So you would have to compare when the time comes, which pair is more executable, right? And you execute on the what? On the pair that's executable. Of course, based off a 4 hour candle range or a 1 hour candle range, but most recommendably, you should be using a 4 hour candle range. Anything lower than that requires experience. So I've given you clear direction, clear bias. Now it's your job to do your best, right, in finding an execution. If I'm generous, I might give you a live call, right, in favor of the execution, right? So, cheers, everyone. Please feel free to give your opinions in the comment section so that I can convey information to you in a way that's better, right? So, anyways, see you guys. Cheers.